I'm here with Charbel Azzi at the ICGN Hakama Conference in Dubai. Welcome, Charbel.
Welcome. Thank you for having me.
As soon as we hear, S&P, we're always excited to get the latest investment advice. However, you've said you're not going to tell us where you're sticking your money these days, although the S&P 500 index, you said, is the most iconic index, kind of insinuating we should, if you don't have it in your portfolio, you should put it in, I'm assuming. And so what are you seeing in terms of the investment landscape here, specifically in the Gulf Middle East area?
Sure. Thank you, Shane. Thank you so much for having me today. From S&P DJI's perspective, so S&P and Dow Jones merged in 2012, bringing the two iconic S&P 500 and the Dow Jones Industrial Average. That's why we are now S&P DJI. But for the region specifically, look, I think I've been covering this market for almost 20 years with S&P 14. And, we are big advocates of transparency and liquidity. Every day, every quarter in my business review that we do in our quarterly business review, we advocate how we can improve liquidity in those markets. You've got the 6 GCC markets, which is Saudi Arabia, UAE, Qatar, Bahrain, and Oman. And then obviously you've got the Middle East over the MENA region on the peripheral on that, which is the Levant area, Lebanon, Jordan, Morocco, and Egypt. These are our key markets where SPDJI focuses on. And our primary priority is liquidity, is how can we transition the liquidity investments into those markets. And we've come on a long way, but I still think if we are to draw a linear line, from point A to point C, we're almost at B in the middle, and we want to keep going that way. And these do happen from S&P's perspective through our indices. So we currently calculate around 5,000 indices for the region, which I'm sure you don't know about those. It's the Pan-Arab family, the GCC family, and the single country indices, along with sectors. And then we've added a lot of flavor to those. So thematics, factors, quality, value, momentum, dividend, being Sharia and non-Sharia. And obviously we have the bond indices, which are our MENA bonds and our MENA Sukuk indices, being high yield and just a standard indices. We partner with asset managers, we partner with asset owners, we partner with exchanges, we partner with regulators to promote those indices as a way to increase liquidity in those markets. For example, we have clients that use our indices to issue ETFs, and those ETFs, which are exchange traded funds, are listed in different exchanges like Saudi Arabia, Abu Dhabi Stock Exchange, Dubai Stock Exchange, Qatar Stock Exchange. So from that perspective, what we want is we take those basket of stocks that are listed, we create a transparent, rule-based methodology that cannot be tampered with. We have our own governance committee, we have our own commercial committee, and that's what clients come to, because we're giving them an index that is so transparent with a very strong brand, which is like S&P. They take that index, they license it, they list it, and then they start gathering AUMs. And in turn, they start buying derivatives off the back of that ETF, they start buying futures, they start buying options. So they start creating that whole ecosystem of tradability that those markets today need here.
And you're saying the high yield is a bit different in the Middle East than it is in other markets.
Right.
Can you compare and contrast that?
Sure. I mean, look, if you look, again, it's depending on how mature the market is. Our markets are maturing. I don't believe they're fully matured. So if I look at the Dow Jones Global High Yield Index, the Sukuk, the high yield, the derived high yield is probably sitting at around 8 to 9%, whereas the regional one is probably sitting at 6 to 7%. Very similar to if you look at a global dividend index. A global dividend index could have much higher yield than just a single country high yield dividend index. It depends on the maturity of those markets. So we give the investor or the market participant the options of what they want to look at. If they want to invest regionally, they have a certain yield that's coming to them from those sukuks. If they want to invest internationally, they have a different yield there. But we give them both options in both avenues.
And from a board governance perspective, what are some of the changes you're seeing and how is that affecting the investment strategies or some of your indexes or investment products?
Good question, Shane. So going back to 2011, we partnered up with Hawkama to launch the first S&P Hawkama Pan-Arab ESG index in the region. And at that time, it was so difficult to sell it because people did not care about ESG, did not want to hear about ESG. It was something that wasn't in anyone's investment horizon. Fast forward to today, we have 11, 12 years of history on that Pan-Arab ESG index with Hawkama. And initially, the scores were so low. Today, the scores have improved massively over 12 years. And the main changes we've been seeing is the way to go about doing business, one. Two, on the board of directors, that there's been a significant inclusion of women in the past in this region. We didn't have that a lot. So that's one of the things I've seen, a big change. We've seen a lot of advocacy on clean energy. We've seen a lot of advocacy on looking at ways to become more ESG friendly or more sustainable friendly, which in the past we really did not have it in this part of the world. As you know, these are petrodollar economies and they're very heavy on oil. So it took us a lot of education, along with Hawkama and a lot of other partners, to educate, and we've been doing it through our exchange partners. We've been doing it through the regulators, CMA in Saudis, ASCA here in the UAE. We've been holding workshops with them, doing educational roundtables, and it has really paid off. So I'm very happy where we are today. I still think there's a lot more room for improvement, but I think we're getting there.
It sounds like you're doing a lot, there's a lot of new stuff coming. Is there any indices or new investment products that you're maybe rolling out that we should save some of our dry powder for?
So there's a few things to look at, right? I think everyone's talking about carbon. So, we launched last year what we call carbon budget indices. I'm not an expert to talk about the methodology on those. I'm more on the commercial side, but this is something that's interesting. So carbon transition and carbon budget is what everyone's talking about. This is what we're advocating to our clients. This is what we're discussing with our market participants, as well as mixing ESG and factors. This is something where you bring a factor-based, like a quality, value, and momentum indices, and you put an ESG or a sustainability overlay. These has been key themes for us as new indices that are being asked to be in the market. So yeah, I think for us as an index provider, we bring the indices to the market, and then we try to find a match through an asset manager who will take it on and make it an investment product.
That was insights from Charbel Azzi at the ICGN Hawkama Conference in Dubai. Thanks, Charbel.
Thank you very much.
Great to have you.